Good evening. Ira Epstein with your SPDR ETF stock market wrap-up. And this wrap-up is for a fairly interesting day today with the late day rally that happened on Thursday, March 2nd, 2023. All right, so let's talk about what went on. We had a lot of bearish news, I thought, this morning when you looked at the unemployment claims because they continue to drop, both in continuing and initial. That is the wrong thing that the Fed wants to see. Labor costs came out, the revised ones, double what the market thought. So they're, number one, people are paying more money and they're hiring more. The cost of labor to a good is going up. It's that simple. And if you're reading what the different Fed members, governors are talking about, they keep saying that. They keep saying that they talk to businesses and they are scared to let go of people and they can't get enough people to hire. So let alone you want to let somebody go, the other. Now, that's not true in the monster companies. You know, you get to the sales forces, you get to these other monster companies that are out there, the big tech companies, and, you know, they can afford to let 8,000 people go at a time, but they still got 100,000 left. I mean, what division are they doing it? How are they doing it? And it's really all about, when you're a public company, making your bottom line look better and better. You know that, I know that. Otherwise, guess what? If you're the head guy, you're out. That's it. You're only as good as your last year. You might get maybe one bad year, but they're not going to let you keep going over and over unless you're the biggest shareholder and you can keep yourself in power. So where are we in the markets? Well, now the markets are starting to come to the realization, it's member after member, that labor is a very serious problem. Mr. Waller today said it. He said, you know, the Fed's done a heck of a job with inflation prices. It's even got housing down. It's got other things. Read his testimony. It's labor, labor, labor. Mr. Bostic spoke today. And he's of the opinion the Fed is getting closer to where it can stop. So he's still of the dove camp. And you need that. You know, you need the yin yang. But I look at the economic data. And I agree with what was said by Mr. Waller. If you get a hot CPI number coming out now, there's nothing the Fed can do but just keep going and going. Because what's happening is this inflation just isn't stopping because people keep getting jobs, they have the money. On the other hand, I'm bothered by something, and I write about it tonight. The amount of auto loans that are in default. We're back to numbers that are approaching the 2006 level. Did you hear what I just said? So what's happening on credit card debt? I want to see that. We know the banks are already putting away money for bad loans. What's going on with all that? That is something we've got to keep our eye on as we go forward. So today was a relief day. We had a big rally happen in all the stock indices. You didn't get that happening in the futures markets, in the interest rates. They continue to just stay where they were. You had interesting earnings from different companies. You know, last night we heard Tesla. They had come out, and of course, Tesla was down today at one point pretty darn good, if you can see here. Got as low as 186, but it was still a market that didn't bounce very much. Again, Mr. Musk is talking, and he's a genius. He's talking the what ifs and where it's all going to be. But we want to see a new car. We want to see how the money's going to be made. And he's switching some models, going to some pay for charging, monthly models on electricity, different ideas that he's got coming up. They'll take time to play out. But when you're looking at TLT, the market is still, excuse me, I must have hit the wrong button there. There we go. When you looked at TLT, you can see what the market did. The market's just staying there fighting. The retailers are a very mixed bag. You saw Macy's today come in and beat, and that was a good number. They did really well. But then you go over and you look at some of the others, and they're not so good. I was showing Costco today as we were doing our live webinar and showing how much pressure they have. But remember, Costco, what kind of store is it? It's a little bit of everything. I mean, you go in there, you're buying groceries, you're buying furniture, you're buying clothing. You know, maybe that's what's hurting them in this particular cycle. They're not just in one area. They're a little bit of everything, an aggregator. The airlines, a mixed bag. You got Delta one way, UAL the other going there. Rivian's still in trouble. I'm hearing people say, hey, it's time to pick up Lucid at $6. Might be a steal. Who knows? So I come here and what do? We look at what we have. In an SPY, you have an outside day. Now, for those of you that have not taken my outside day course, this is the example. Here's a market that had been coming down. You get an outside day with the lowest low of a move. Is that a signal that the move is ending? At this time it is. Take out that low and it becomes a continuation to the downside. By when though? Well, you got 48 hours to do that, Friday or Monday. That's how I view it. If it's not taken out, then I've put in a trade bottom that wants to give you a little bit of a lift. I didn't say a big one. I said a little bit of a lift. The market still has to be able to get over here, 401.29, the last rally high, to say you're breaking the pattern of lower highs, lower lows. Where's the market trying to find its support? In unison, the 200-day average didn't quite make it to the 100. And when we add the Bollinger Band, there's your combination. I have said to you, and I'm going to repeat what I say. When you haven't hit a major moving average, a 200 or a 100 or an 18 for a while, and you finally do, that will be if you're breaking a support number. Can it slip through it? Of course it can slip through it. But the combination of it with a Bollinger Band is pretty darn strong. Let the other guy sell into that. You don't need to be that guy. Maybe that's where you're taking some money off the short side and you're looking to see, should I put out more money? Well, if you get the embedded reading, that's one way to look at it. So what did we do with the readings? To get an embedded reading means instead of the numbers traveling between an 80 and a 20 level that they typically do, they'll lock in from time to time and both numbers will stay over 80 or both numbers will stay under 20, bullish and bearish. So today, both numbers were under 20. Yesterday, both numbers were under 20. And the day before, they were not both under 20. Crucial. So tomorrow, if you get a failure in this market, a failure, which means you've got to get a good break going in the market, and you embed, then I think the market's saying it wants to come back and challenge these lows, and if it can get through them, watch out below. I don't think that's going to be the case, but I'm ready for it. Does that make sense? In UGA, the gasoline fund, okay, I'm looking now for big resistance for the first time at the 200-day average, just what I mentioned in SPY, the flip-flop. The resistance at the 200 and the upper Bollinger Band. So the guys that have caught that move, I wouldn't be surprised they take some money off the table up there. Makes all the sense in the world. NVIDIA, again, first challenge of a Bollinger Band, overbought. Overbought reading happens when the slow stochastics are over a 70 reading and not embedded going sideways over 80, both numbers for several days or more. And that's where I think the pros would step out of the market. Tesla, this is today a day for support. First challenge of a Bollinger Band. You're not embedded. What should the pros do? Come out. Could it drop down to the 100? It could fall apart here. This is a chart that has gone from roughly 100 to 200, and we didn't get much of a story at the big event yesterday. However, I still am just a chartist. And the first challenge of a Bollinger Band, to me, that's where the pros come out on the upside or downside for some of their money. Was there a trend going into this? There was not. You had a higher high, lower low. You're really caught in the sideways action here, and you have momentum going down. And if you're down at all tomorrow, you'll be oversold like that. These numbers will, the 34 will probably get really quickly under 30. And the reason is, if you take out today's lows, you'll catch some more stops. The question is, can you do that? The market, I think the professional money said, okay, we had a bad conversation. We didn't go anywhere in the earnings reports and blah, 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 and down you go. In XLF, you're riding the lower Bollinger Band. That's not good action. This is still bearish, but it's oversold. It refuses to embed. So I have a philosophy in trading, and I say it to my subscribers in the morning, and I teach them what I've learned over 5 decades of doing this. Oversold markets generally don't attract the big money going short additional positions. They wait for it to either lock in the trend, I call that embedded, with an indicator. It can be MACD, relative strength, it could be slow stochastics. You have to decide which one you're comfortable with. I have taught in my career all three. I love the slow stochastic. It has a personality. And that personality to me is everything, all right? Because it can be neutral, telling you that. It could be bullish, it could be bearish. And it tells you, and it leads the market in its momentum most of the time. Not all the time. Price can lead from time to time your momentum index, but it's not typically the case. In any case, you're running this, and support starts at the 100 and this number. You've been coming to the support. You fought with it, you bounced away, you're back to testing it. That's all. Is the market oversold? Absolutely. It either embeds or it corrects to the upside. In XLI, you're now in an uptrend with tonight's action. So until we get back under here, and I'll give you the number exactly, yesterday's low, which was 170, I predict that the pros will be buying the market, but not looking for a big move. If they're buying it, they're going to look at the most, 103.88. I think you're caught in this sideways action. I like to avoid sideways action. I'm much more interested in markets that aren't going sideways or overbought or oversold. Stocks. You've developed a sideways action market that's caught at the lower Bollinger Band to the 18-day average of closes. It had gotten itself oversold. It's correcting it, but it's not in a trend, and I don't see a trend developing. If you were to get a big pop, I'd look for massive resistance at 436.39. If it breaks through today's low, I think you got a real problem. Then maybe the market wants to say, I want to go for these numbers down here. Maybe. All right, would I tell a client to go short under a Bollinger Band or long over one? It isn't going to happen. You can do whatever you want, not going to come from me. Home builders, okay. Did we have an outside day up? So let's take a look. Yesterday's range was 67.75 to 66.77. We didn't take out yesterday's high. So it's just a lower low day, still trying to stay within the Bollinger Band up to maybe the 18-day average in an oversold condition. Bye-bye. There's better things to do with money. What about the energy? Well, this has been a market that has downside bias, downside. Whenever you're under the 18-day average, the bias should be to the downside. You're looking for potential sell signals on your other indicators. When you get the buy signal, which you have on the swing line with higher lows, higher highs, but you're under that, the goal is to get up to the closest moving average. You got two levels now. You got the 18, which you're knocking on the door of, and the 100. You got to 86.41 today. The 18 is 86.45. So that's where I'm looking for some resistance. Second part of my equation, oversold. How do you correct oversold? You either embed, develop it more bearish, or you get a bounce, and that's what the market is doing. GLD, a bear market rally into the 18-day average, lost the embedded reading. So let's you and I talk turkey. We come back in the market, and this is how we looked on Tuesday. Yesterday, you have a 24 reading. I am looking for the market to challenge the 18-day average. I still am. I think you'll be on it before you know what's going on. SLV, are we going to lose the bearish embedded reading? It's at 1955. If it closes over 21, yes, but where? If it's just like this, then the goal is the gray line. It's got to be over that high to say that it's going to be the 18-day average of closes. So still an overall bearish chart. Could lose the momentum, but hasn't done it yet. In the copper market, do you think I'm wrong when I say that each time you're hitting that Bollinger Band, you're getting a bounce away from it? I don't think I am. Are we trending? We're not. You have a higher high, lower low pattern. But the market today came down, held the 18. What if it gets over today's high and closes there? For the short term, it'll be bullish suddenly, calling that maybe 40.43 is your next target. If it does that, the one number you don't want to take out is today, Thursday's low, because then you could get a reversal back. You're at a tricky spot on the chart. And that's because you're hanging at the 18-day average. In TLT, as bearish as I am on interest rates, today was the day where I'd be yelling at you, cover your short. Get out of something. Don't have to take it all. You have an embedded reading, but you're back to the Bollinger Band, and you're probably from there going to bounce a little bit. Did you get the message? That's basically what you'd get from me. UUP, in the dollar, you still have a bullish embedded reading. Not overbought, bullish embedded. Until it's lost, I'm looking for another challenge of the minimum, the Bollinger Band, maybe the 100-day average even. And if I'm bullish the dollar, I'm bearish the euro. And bingo, away you go. But you lost the embedded reading. I thought you would go to the 18-day average, and you did. It's neutral right here. There is nothing that I see in that. So you put it all together, and what do you have? You have the opportunity to come join me in the mornings, because at 9 o'clock in the morning, I'm recording 40 to 50 charts often. I say that because sometimes I'll take the normal 40 I do and do dailies with weeklies. So you get to see what that's doing. But I help you build the chart right in front of it. So, you can see what we're building on, what we're doing, the idea behind it, and you decide, is that for you? Isn't it for you? How do you want to work? I offer you something else. A lot of people will write me during the day, Ira, what do you think of this? And I'll create 30-second to 1-minute videos, open the chart, build it with you right in front of me. I send it to you. You're not on there with me. And people go, they can't believe that, you're getting that, and here's what I'm seeing. And why? Doesn't mean I'm right. Doesn't mean I'm right at all, okay? Nobody walks on water. Jesus has left the building, okay? He's not with me. So that's how you've got to look at it, all right? You're going to have errors. You're going to have bad trades. You're going to have good trades. The question is, how consistent are you without being a bad trader? That's going to be the whole thing that you want to look at. How do you get this? It's so simple. All you're going to do is up here, give it a click, it'll take you right into the research area, and it's all there for you. It's right in front of you. I'm Ira Epstein. I'll see you in the morning as we talk about the financial markets and what they do. And I'm excited. After today's rally, are we going to get follow through, or are these markets going to slip back? I'm Ira. Take care.